Without a doubt, there's a right way to play the market. Look, I think that the so-called reopening trades have been picked over, and we'll talk about that a little later in the block. But people are losing sight that we're at a seminal moment here, and it's been brought forward by the pandemic, but it's the fourth industrial revolution. And what we're seeing is all these tech stocks are playing broadly into the economy. So that's why the money's going there. And by the way, they're cheaper. And you've got better growth. So when you talk about a company like Qualcomm, you're not talking about technology. You're talking about a Qualcomm in a Peloton bike. You're talking about it in a Vuzix glasses. You're talking about it in warehouses. You're talking about an exponential total addressable market that you can't even calculate right now. So why play around and hope that the economy is going to do so much better? I think it will, but why do that when companies that are in this reopening trade, I'm not talking about the airlines and the cruise lines, I'm talking about some of the backbone industrial companies like Honeywell that are already expressing that multiple, selling at a premium to the S&P where those are selling at discount.
You sold Honeywell, right, on that note?
I did. Well, I didn't sell on that note. I sold it anyway because everybody owns Honeywell. And I know, look, everybody owns Amazon, everybody owns Microsoft, but I look at the valuation. And I see Honeywell at a 26 PE for next year, and the cyclical earnings are going to go up 20%. And I see Qorvo that's selling at 16 times next year, and their earnings are going from $3.65 to $9. Or Qualcomm selling at 16 times with greater growth, or Skyworks. So you name it. So that's where I'd rather be. I'd rather be in the companies that are going to be leading this next generation of this industrial revolution.
All right, Shan. So, for all this talk about the reopen trade and all this talk about the cyclical trade and the epicenter that people keep talking about in the optimism post-vaccine, Bank of America says all this money continues to go into tech. And UBS says don't worry about tech being a bubble because they say we don't think it's time to sell the sector on bubble concerns. The IT sector looks, they say, appropriately valued relative to other sectors, given current expectations for future cash flows and discount rates. They right. NASDAQ's been up a ton.
Yeah, I mean, I think Steve makes a good point. I know that's surprising. It must be Friday for me to say that. But in this case, he's making a great point. I think that if you think about what technology represents, I'm crabby today about Tesla, so I'm sorry. I think that what we are looking at is we're looking at this scenario whereby technology as a sector is very broad. We saw technology be split between communication services and traditional tech. And honestly, we probably need another split now if you think about it in terms of the way you're actually investing in technology. Because big technology, mature technology, the Microsofts of the world, they're absolutely going to participate in this reopening trade. They don't even need the reopening trade, but it's not like they're not going to benefit. And I don't disagree. If I look at areas like materials and energy, I know those are supposed to be cyclical sectors I get really excited about. But, I'm not as excited about them across the board. I still think that we need to be focused, Scott, on differentiation within the sectors. And I think what you're seeing now is you're seeing a lot of that cash on the sidelines, which we've seen coming into the market, which is a positive to sustain equity gains into next year. I think it's coming into the safe places because they've been in cash. So they're not going to jump in and put overweights into the energy sector if they've been in cash all this time. They're going to buy the winners, and that's what we're seeing. I do think that the second derivative of that is this broadening out into some of the more cyclical areas. I think there is going to be differentiation and divergence within those cyclicals. I don't agree with Steve in that they've all been picked through. I think there's still opportunities in those sectors, particularly in areas like financials. But I acknowledge the fact that if you're investing on this thematic undercurrent of technology being a part of every sector and industry, which we have been for the last few years, I would say that there's continued room to run here. And to 1999, there are stocks and sectors and sub-industries within the technology sector that are troublesome from a valuation perspective, but it's not at the top.